So import pandas as CD, import numpy as LC, matplotlib.py plot as PLC, and percentage matplotlib inline. The standard libraries you need to import for any Python activity. Okay, all of you imported? Now we will import the requirement from pandas underscore data reader import data. From pandas underscore data reader import data. This is for importing the data from Yahoo Finance. And also import the newly installed package TA. You can also import the newly installed package TA. So first we'll open a Jupyter notebook, either Jupyter notebook or you can use Google Collaboratory, which is an online version. Create a notebook. And Harish, this is the command for installing the TA package. Exclamation pip install TA. Open a Google Colab and run this command. Okay. Exclamation pip install TA. That will install the TA package. Harish.
Okay, sir.
Okay, yeah. So yesterday we played with individual stocks. We played with individual stocks and we worked with index as a separate entity. But when you look at real-time investing, it is all about portfolio. Portfolio investing is all about investing in multiple stocks. You have to invest in multiple stocks in different verticals, different sectors, different sizes, large cap, mid cap, small cap. Okay, so there are a lot of things which you need to do when you're building a portfolio. So portfolio is very, very important for successful investing. It's based on a simple thing like don't put all your eggs in one basket, put them in separate baskets. It's same thing here. Don't invest all your money in one single stock, thereby you lose out all. If something goes wrong, you might lose everything. Split your investments into multiple stocks or asset classes. Multiple stocks or asset classes. Asset classes means you can invest in equities, you can invest in mutual funds, you can invest in bonds, you can invest in ETFs. So there are multiple types of asset classes also. So you can do also, even you can invest in currencies and commodities also, like gold. Gold is one of the most highly invested by individuals. So that is what is there. Okay, so basically let us import multiple stocks. Today we will import multiple stocks in one go, and then we will also see how to analyze those stocks. Okay, we'll analyze those stocks. Now let us go with top 10 stocks. Let us play with simple things. Right now, top 10 Sensex stocks. So top 10 Sensex stocks by weight are RIL, HDFC Bank, Infosys. So you have these top 10. Reliance, HDFC Bank, HDFC, ICICI Bank, Infosys, ITC, Kotak Bank, TCS, and LNT. Or I think we have multiple banks here. So what we will do is we'll choose a sector, different types of stocks. So what all stocks we'll go for is we will use Reliance. We will also go with HDFC Bank. We will also go with TCS. Then we'll also go with L&T. Then ITC, HUL, Maruti, and then we'll go with Airtel. And then we'll also go with Asian Paint. Asian Paint and what we call the other one, Pharma, Sun Pharma. Okay. So we'll download these stocks. I'll tell you the tickets, or we'll find the tickets very easily in Yahoo Finance. We'll use the source as Yahoo Finance. Okay. So finance.yahoo.com. So Yahoo Finance. So first we need the ticker of Reliance. Reliance Industries Limited. We'll take all Bombay Stock Exchange, right? So Reliance.bo. Reliance all caps. So what I will do is, I will create a list of stock. Stock is equal to square bracket, single quote, first one, Reliance.bo, comma, single quote. After Reliance, we will look for HDFC Bank. HDFC Bank Limited in Bombay Stock Exchange. So HDFC Bank.bo, the second one. HDFC Bank.bo, the second one, comma, single quote. Then we'll go with TCS, Tata Consultancy Services. Tata Consultancy Services is TCS.bo. You can simply type all caps, TCS.bo. .bo means Bombay Stock Exchange. .ns means National Stock Exchange. So that's one thing you always remember. Then after TCS, L&T, Larsen and Toubro. So Larsen and Toubro. Larsen and Toubro Limited, LT.bo. Again, a simple ticker, LT.bo. Come out of the quotes, comma. Then after L&T, we ask for ITC. ITC Limited, Bombay Stock Exchange, ITC.bo. It is ITC.bo. Then comma, and then press enter. We will use the second line, single quote. After ITC, we will go with HUL. Hindustan Unilever Limited. BO. Hindunilever.bo. Yes, somebody is asking a question. Hindunilever.unilvr.bo. Okay, so putting it there, Hindustan Unilever.bo, comma, single quote. Maruti, I think it is same, Maruti.bo only. Maruti.bo. So Maruti.bo. And single quotes. After Maruti, Airtel. So Bharti Airtel Limited. So BhartiAirtel.bo. BhartiAirtel.bo. comma, single quotes, then Asian Paints. Asian Paints Limited. So we have asianpaint.bo, asianpaint.bo, comma, and then press enter again. Then we'll go with Sun Pharma. Sun Pharma. Sunpharma.bo. Single quotes, sunpharma.bo, comma, and then the index. Index is inverted V, BSE, SN, Sensex. So we'll go with Sensex as the. These are the list of stocks we are going to import in one go. We'll import all the stock data in one go. So these are the 10 stocks of different verticals or different industries, and also an index, which is Bombay Stock Exchange. You also need an index to check for betas and all. So we are doing the index also. Okay. Okay, all of you got the stock ticker? So basically, number of assets we are looking at is length of stock. So number of assets in our portfolio is 11. 10 stocks and 1 index. 10 stocks and 1 index. Shall I proceed? All of you? Can I proceed? Go ahead. Now, when you're importing all the stock, you need to write a loop. A small loop you have to write, nothing much complicated here. It's a simple 2-line loop which will go and iterate each of the stock data and bring us the output into a data frame. Okay, very simplistic thing. So first let us divide what you call data is equal to PD dot data frame, PD dot data frame in bracket columns is equal to stock. Columns is equal to stock. Right? Don't press shift plus enter. We'll write this everything in single cell. Data is equal to PD dot data frame, columns is equal to stocks. We'll write a simple for loop which will iterate and give us the data frame. For symbol in stock, the list. We have already created a list called stock. For symbol in stock, data square bracket symbol is equal to data square bracket symbol is equal to data dot data reader open bracket symbol comma data underscore source is equal to single quotes Yahoo. We are taking the source as Yahoo, comma, then start date. Start is equal to single quotes. So what we will say, we will take data for last 3 years. Okay, we'll take last 3 years data, or we'll take 2 years data, right? 2017 hyphen 10 hyphen 01 start date, comma, end is equal to date yesterday. What is the date yesterday? 15th, right? 2020 hyphen 10 hyphen 15. So we have given the start date and we have also given the end date. And in the square bracket, outside the bracket, we have to give what data we want. We want only the close price. We want only the close. So add the close to the command. Square bracket, single quote, close. So data is equal to pd dot data frame, columns is equal to stock, because we are one column names as stock names. For symbol in stock, data, symbol, data dot data reader, symbol, data source Yahoo, start date and end date. And then outside the round brackets, within the single brackets, we are specifying only one column, which is the close price column. We'll run the data. Oh, data frame object has no data reader. What is the error we got? What take here? Panda says data. Okay. Data dot reader symbol source is equal to Yahoo, start date, end date. So where is the error pointing to? Data frame object has no attribute data reader. Okay. This we'll put it in separate loop, then let us see how it will work. Okay. So it is saying data frame has no data reader. Let us do it in different things. So that way it will not. Oh, again error. We got error. Oh, sometimes data symbol. Data frame object has no attribute data reader. Okay, I think it is taking it wrong way. So what we will do is, I made a mistake. So what we will do is, we will change the name. Okay, DF. That is contradicting with this data and this data. So we will change it as DF is equal to, and then we will put it here, because we are using data again and again, so it is getting confused. So DF is equal to pd dot data frame, columns is equal to stock. Then instead of data DF symbol, then it will go into DF symbol is equal to data dot data reader symbol data underscore close. Now it will do. It is naming what you call contradiction. Correct? It has again given us a problem. I think we have to run that thing again. Oh, again it is giving the same. Did I miss any data somewhere? Let me remove this. Okay, 749 and 11. We got the data. Okay. Now we'll give this data frame here. Data TF is equal to TD dot data frame TF. Data DF is equal to PD dot data frame DF. Now we got the data frame. So it is contradicting, so no problem. So let us look at the data DF dot head 2. Yes, perfect. We got the closing prices of all the stocks. Excellent. So we have run a simple loop, and then we put the data. It gave it as a thing, what you call data into a data frame, and now we got the data. We got all the data points in one go. All the close price of all the 10 stocks and index. So this is the best way of downloading multiple data. You can give 50 stocks also. Not that, only thing is you can add these stickers here. All you have to do is add more stock tickers to this. Only thing is the sticker should match with the Yahoo ticker. Then you run a for loop and then convert the data into a data frame. You'll have all the data, see, date-wise and all the stocks, Reliance, ITC, till your what you call Bombay Stock Exchange, everything is there. So all these stocks are here. Let me just scroll down. Bharati, Asian Paints, Sun Pharma, and Sensex. BSC, Sensex. All the stocks are here. So all of you got the loop and the understanding, or you want to see the data here? Let us see. This is the loop, which will give you the data of all the stocks. Closing prices. So all of you got this? Can I move forward? All of you got this? Okay. Suparnika and all, you have completed, you have imported the data. Jwalita, Padmavati, all have imported, because without this data we can't move forward. Everybody must have this data. Okay, so we have got the data here. We can check the first two things. We have all the stocks and data here. Now, if you observe, the prices are in different mathematical units. Reliance is in 700, 900. Okay, HDFC Bank is 900. But look at TCS, it is 1200. L&T is 1100. ITC is only 261. So you have different stocks with different. See, Maruti is in 7,888. So when you have stocks with different mathematical units, you cannot compare them directly. You cannot compare them directly. So Arika, what is the problem you're having? So we cannot compare these stocks directly. Okay. So what you do is you write the loop here. Start running from here. Again, run from data, TA, and stocks list onwards. You run it again. or give me your any desk number, I will correct it for you. Just accept my connection request so that I'll connect it and correct it for you. Scroll up. Up. So this C must be capital C, not small c. The close is capital C. Now run. Yes, it ran. Data DF got it. Got the data. Okay. See, one simple alphabet mismatch will create problem. That we have to be very, very careful in this part. So one single alphabet will make a very, very big difference here. Okay, so that you always keep in mind. Now, since these numbers are in different sizes, we cannot compare them individually. How we will compare them? You will compare stock, what you use? Using log normal returns. Because we assume the returns, daily returns will be a normal distribution, so we have to calculate log normal returns. So based on this, we can compare because once you convert them into log normal returns, all the returns will be between 0 and 1, so you can compare them easily. Okay, so when you're comparing multiple stocks of different prices, that means one price in 200, one in 700, 900, 1200, 7000, 8000, and Sensex is in 40,000. You can't do that comparison directly. So you have to do normal comparison, log normal comparison. So let us say PCT underscore change, percent change is equal to or let me just 1 second. Daily change is equal to data DF dot PCT underscore change bracket. There's a function called percentage change, which will calculate the between current and prior. Okay. Then we will call it as return is equal to np dot log open bracket 1 plus daily underscore change. So first we will calculate the division of current divided by previous, and then we make it into logarithmic change. So we will get the return. So we are getting log normal return. So return dot head 2, or let us say 3, because first one will be NaN. So we'll get it like this. See, we got the daily returns of the stock. Now we can compare their performance, because all of them are in log normal returns. Now you can compare their performance. It's very easy for you to compare their performance. Got it? So we have computed the log normal return. We have computed the log normal return. Formula is ln current divided by previous. Okay, so we have converted everything into log normal return. Now we can't just compare them like that. We have to scroll down. So what we will do is we will compare them based on first metric, average return. Average return. What is the average return? So average underscore ret is equal to returns dot mean, and then we will say average underscore ret. See, we got the average returns of each of the companies. So we got the average returns of each of these companies. If you want them based on sorting level, you can use sort also. Average dot sort underscore values ascending is equal to false. So we are running the sort by highest return. Highest average return. So which company has given the highest average return in the last 3 years is Reliance, followed by TCS, followed by Hindustan Unilever, then Asian Paints, HDFC Bank, BSC Sensex, and then Airtel, Sun Pharma, Maruti, LT and ITC. Last 3 years. We have taken the data of last 3 years. This is the highest return is given by Reliance. We are sorting them based by ascending false means highest return on top, followed by the lowest return. So average returns is giving us that Reliance has performed well, TCS has performed well, Hindustan Unilever has performed well in the last year. Last 3 years, not last year. I'll correct myself, last 3 years. Okay. So all of you got this? Average returns are the comparison point. Now, we also need to find out the volatility. Which stocks had high volatility, and we also need to compare both, right? We can't even go with the return only. We also have to go with the volatility also. So what we prefer, high return and less volatility. We generally prefer high return with less volatility. Let us calculate the volatility. What is the indicator for volatility? What is the primary indicator for volatility? The primary indicator for volatility, what is it? Standard deviation. Yes, Aditya, you are absolutely right. Standard deviation. So we will calculate volatility, which is nothing but standard deviation. So basic rule is the stock must be high return less standard deviation. So STD underscore ret is equal to return dot STD. STD underscore ret dot sort underscore values, sort underscore values in bracket ascending is true because we want the lowest standard deviation on top. So the lowest volatility Sensex is having. Now Hindustan Unilever. See, Hindustan Unilever is returns, and in terms of quality, number 2. Asian Paints is number 4 in returns and also number 3 in volatility. So HDFC Bank is what we call number 5 in average returns. It is number 4 in volatility. So if you look at these volatility numbers, we can say that Hindustan Unilever, Asian Paints and HDFC Bank is good, and even Reliance also has 2% volatility. The volatility is not that much, only 2% volatility is there. So we can look at the portfolio stocks like this. We must have stocks with high return as well as some sort of volatility. If there is no volatility, you cannot invest in that particular stock. For some sort of return, you should always take risk, right? So volatility has to be there. Otherwise, we don't trade in that low volatile stock. We want to have some sort of volatility so that we can earn return. Okay? Can I move forward? All of you got this? Shall I move forward? Can you confirm, please? Others, can you please confirm? Shall I move forward? Now, after volatility, we have to find the relationship between these stocks. Relationship between stocks, which is based on covariance and correlation. Covariance and correlation. Now, in case of covariance, we always look for whether it is positive or negative. If it is looking at covariance, we will look for the positive or negative, whether the value is positive or negative. Positive means what? Positive covariance. Both stocks move in same direction, which can be up or down. Negative covariance means both the stocks move in opposite. Negative covariance, both stocks move in opposite direction. So one goes up, the other will go down. So relationship between stocks, covariance and correlation. Let us look at first covariance. Covariance is very easy to calculate. Okay, covariance very easy to calculate. Returns dot COV. We got the covariance matrix. Returns dot COV. We got the values. And if you look at returns covariance, all of them are positive, right? Do you see any negative values here? Till now, nothing. Just let me scroll. Any negative values? I don't think any negative values are there because, of course, obviously everything is linked to Sensex, so they will be always positive. Okay, returns dot COV. COV is for covariance. Now there is one more metric, correlation. Correlation quantifies the relationship. in numerical terms. And correlation lies between -1 to 1. Above 0.60 till 0.99, we call it as strong correlation. 0.30 to 0.59, we call it as moderate correlation. 0.10 to 0.29, we call it as weak correlation. Less than 0.10 and 0, we call it as no correlation. Less than 0, we call it as negative correlation. Now, one is perfect positive correlation. You have all those things, but let us go with this basic metric, correlation metric. Okay. So, let us see what is the correlation status of our return stock COR, double R. Return stock CORR. For correlation, return stock CORR. All right, all of you got this? Now, when you have this large matrix, we can't see all of them in one go. Okay, so we are not able to see all the stocks in one go. So what we will do is, we will import a plotting technique called import Cbon is a visualization package as SNS. There is a visualization package called Cbon. Cbon as SNS. So PLT dot figure in bracket fixed size is equal to we will make it as 10 by 10. Okay, we'll increase the plot size. Now SNS dot core plot SNS dot core plot returns. Oh, Cbon has no thing called core plot. What happened? Did it suggest anything? Okay, let me just check. Contribution plot Cbon. Okay, I think it is SNS dot pair plot. So, what plot we are getting? Let me check. Oh, we are getting pair plots like this. This is also a little bit thing. Okay, let us go with for plot only. SMS dot linear model dot plot. What the hell? It's not working. We'll go with the pair plot only. Let us see if in pair plot can understand pair plot and it's okay. Or else, this is algorithm correlation plot. So this is giving pair plot. See, we should look for patterns like this. See, these are linear patterns. So, or else we will do one thing. You guys able to comprehend the data from here? So Reliance to HDFC Bank, I don't think there is any relationship. Reliance with TCS also there is no relationship because look at the straight line things. I think Reliance with LT also very less relationship. Reliance with ITC also not a good relationship. They are all spread. So we are looking for linear patterns. Linear patterns would be like this. Reliance with BSE Sensex, there is a Reliance pattern. Or let us say SNS dot heat map returns dot EO. So I think Sensex and Reliance are very. So this is the one thing. Light reddish color is what we call the strong relationship. SNS heat map written dot EO. It is giving you the grid. So SNS dot heat map, we are getting the returns correlations. We have to look for light, this color, fading light color. This color is indicating strong correlation. See, this lightish color is indicating strong correlation. Strong correlation with BSESN, HDFC Bank, with BSESN, with Sensex, Reliance, HDFC has strong relation. I think most of the strong correlations are with Sensex only. SNS dot heat map, returns dot correlation. Got it? All of you got this? Heat map of returns correlation. Can I move forward? Yeah. See, when you are, now let us look at portfolio analysis. When you look at portfolio analysis, the most important is covariance matrix. Generally in portfolio analysis, we take covariance matrix or correlation matrix as a input. But I think latest textbooks are all related to covariance matrix. Let us first create covariance under mat is equal to return dot COV. We need this covariance matrix as an input. Okay. So when you are looking at portfolio analysis, you will either use covariance matrix as input or you can also use correlation matrix as input. So let us save the covariance matrix returns dot COV. Okay. All right. So we have saved the covariance matrix into a covar mat because we need it as input to calculate the portfolio strategy. Now, stock DF is equal to data DF, or let us say returns dot drop in bracket. We will drop BSESN from our data because we don't want Sensex. So inverted V BSESN. I am dropping the Sensex for the time being, comma axis is equal to 1. So axis is equal to 1 is column dropping. Axis is equal to 1 refers to column dropping. Axis is equal to 0 is row dropping. So be careful. We have to be careful. We are dropping the column called BSESN so that we can have only the stock. Only we have the stock. We don't want the index. Okay. So stock DF dot columns. So basically we have these columns of data. So 10 stocks we have, right? We have dropped the BSE Sensex, dropping the index. What I am doing here is I am dropping the index. We are dropping the index because we don't want to invest in Sensex because we can't invest in Sensex. So we can only invest in stocks. Okay. So I have taken the stocks as the separate entity. Okay. We have taken stocks as the separate entity. Now we will start working with our portfolio weights. Now, portfolio weights means how much should I invest in each of these stocks. Let us say I have 10 lakhs with me how much of that 10 lakh should I invest in each of these stocks. That is what your portfolio strategy will tell you. Now, we have to first start with assigning equal weights. Let us start with assigning equal weights portfolio. Let us say I am ready to invest equal amounts of money in each of these stocks. So let us set our weight. Okay, I am setting my weight. Weight is equal to NP dot array, open bracket, within square brackets you have to give 0.10, sorry, 0.10, comma 0.10, comma 0.10, comma 0.10, comma 0.10. So 1, 2, 3, 4, 5. 0.10, 0.10, 0.10. So 1, 2, 3, 4, 5, 6, 7, 8, and we need to give 2 more. 0.10, comma 0.10. So I am investing 10% of my money in each of these stocks. Okay, I am putting 10% in each of these stocks. We'll start with equal investing. Yes, please. Okay. Now we will calculate portfolio return. Portfolio underscore ret is equal to NP dot sum, open bracket, average underscore ret into weight.
ಮತ್ತೆ ಮೇಡಮ್ ನೀವು ಕೋಡಿಂಗ್ ನೆಕ್ಸ್ಟ್ ನೀವು ಎಲ್ಲೇ ಮಾಡಾಗಿದ್ರೆ ಈ ತರ ಮಾಡಬಾರ್ದು ಮೇಡಮ್, ಯಾಕಂದ್ರೆ ಇವಾಗ ನಾನು ಮತ್ತೆ ಇದಕ್ಕೆ ಕೋಡಿಂಗ್ ಮಾಡ್ಕೋಬೇಕು.
So portfolio return under we call it as NP dot sum, cumulative return, average return into weight, NP dot sum. Similarly, portfolio underscore STD, standard deviation is equal to portfolio underscore standard deviation is equal to NP dot SQRT, square root of NP dot matrix of weight dot T, transpose of weight, comma NP dot we have covariance underscore mat, comma weight, comma weight. So we are trying to calculate the portfolio standard deviation or portfolio volatility. Portfolio standard deviation or portfolio volatility. Okay. So print portfolio underscore ret and then print port underscore STD, standard deviation. Okay. Yes, please. Any doubts?
ಇಲ್ಲ ಒರಿಜಿನಲ್ ಶೀಟ್ ಇದೆ, ಕರೆಕ್ಟ್ ಆಗಿದೆ.
Okay, where are there is error?
ಕಾಪಿ ಮಾಡೋದು ಇಲ್ಲ, ಅಲ್ಲಿ ಕಾಪಿ ಮಾಡಿದಾಗ
so we have given average return only, right?
ಇದನ್ನೆಲ್ಲ ಮಾಡಿದ್ರೆ ಅದು ಸರಿಯಾಗಿ ಬರ್ತಾ ಇಲ್ಲ ಆರ್ಡರ್ಲಿ.
Average underscore ret.
ಜಾಸ್ತಿ ಅದನ್ನ ಮಾತ್ರ ಮಾಡ್ಕೊಂಡು ಕಳಿಸ್ತೀನಿ.
Okay. So we have to remove the average return will have 11, no? That is the error. That is the error we are getting. So what we will do is, one second, class of average type of AVG underscore rect underscore series. Okay. So we have to calculate stocks DF. All right. Okay. Got it. So we will change some small things here. So now let us do the small adjustments here. So we will say portfolio return is equal to stock TF dot mean into weight into weight into weight. Okay. Here also we will convert stock DF, or let me add one more thing here. EOV underscore mat. So we will make it as EOV underscore mat is equal to stock PF dot COV. Let us redefine the covariance matrix also. We will take only the stocks. Then stock PF dot mean into weight. Yes, now we will get it. See here. So let us remove this. Our covariance matrix we have to change. Okay. So redo the covariance matrix and then we'll get the return. So portfolio underscore red is equal to NP dot sum stock DF dot mean into weight. We got 0.0003 something and then the standard deviation of 0.0125. So if you want to calculate annualized return, you multiply with 365. Port underscore red into 365, we'll get the annualized return. So annualized return of 12.41%. Similarly, port underscore STD into port underscore STD into 365. So we have 5% volatility. So yearly we are getting 12% return with 5% volatility. So this is how we calculated the portfolio. So our job is to maximize the return. So 12% return is not enough for me. 12% return will not be enough for me. I need to go beyond 12%. Because if I put equal amount of money in all these 10 stocks, I am getting 12% annualized return with 5% volatility. Okay, all of you got this? So we multiplied the returns with weights, and then we calculated the dot matrix of weights. We multiplied weights with covariance matrix. We multiplied weights with covariance matrix, and then we take the square root of that one to calculate the portfolio standard deviation. For calculating portfolio standard deviation, we have calculated, we have used the square root. I'll show you the formula. It's a little bit lengthy formula. Portfolio standard deviation. It's in formula. Here, standard deviation of 2 asset portfolio. So multi-asset portfolio, it will be even longer. So this is the standard deviation of only 2 asset portfolio. The formula is very, very compact. Weight into standard deviation plus weight 2 into standard plus 2 into weight 1, weight 2, covariance of 1 and 2. So that is what we have incorporated in the formula. So portfolio standard deviation is a very, very complex formula which involves weights and standard deviation plus 2 into weight 1, 1, 2 into covariance matrix. So that is what we have incorporated in our thing. So this whole formula is the standard deviation of the portfolio calculation. Square root of dot matrix of weights transpose with dot matrix of covariance matrix and weights. So this is a very complex formula which will calculate the portfolio standard deviation and portfolio return. All right. Can I move forward? Okay. Now, let us do a small graphing of our returns. Let us understand what is the returns are happening right now. We already have kept the picture large for C in stocks DF dot columns dot values column for C in stocks DF dot columns dot values PLT dot plot. We are plotting all the returns. Stock DF dot index comma stock DF comma index comma stock DF square bracket C comma LW is equal to 3 comma LW is equal to 3 alpha is equal to 0.8 comma label is equal to C. comma label is equal to C. Then PLT dot legend open bracket location is equal to upper comma font size is equal to 10. Font size is equal to 10. PLT dot y label is in bracket single quote returns. So we are not able to see the plot completely, so we will increase the best. So let us say location is equal to best. We will also change the figure size. PLT dot figure in bracket fig size is equal to open bracket fig size is equal to 14 comma 7. Oh, here it is. Yes. Now let us make it 10 comma 7. Right. 10 comma 7 is better. So we are plotting all the returns. We are plotting all the returns in the plot. Got it? Also got the plots of the returns. Conforma is looking very volatile. We can see basically I'm looking for volatility. So all of you got the graph? Any problems in the graphing? You just tell me, I'll correct it. Otherwise, we'll move forward. So all of you got the plot? Shall I move forward? Others, can you move forward? Right? Suparnika, Jalita, Padmavati. Okay. So now let us start creating a what we call optimization of portfolio. First, let us import the function which we need. Import scipy dot optimize as SEO. Import scipy dot optimize as SEO. There is an optimization function which is there, which is in scipy package, which is part of NumPy. We are importing it. Import scipy dot optimize as SEO. Now we will define the same function what we have done. Define calculate portfolio perform is weight, comma, average return, comma, okay, we have to define average return. Just defining as average return stock BF dot mean average return, comma, covariance underscore math. Covariance underscore math. So I think we have defined covariance underscore math, right? Yeah. The stock data frame. So 3 parameters, colon. So for performance of the portfolio, we need 3 parameters. For calculating the portfolio performance, we need the portfolio rate, we need the average return we got on the portfolio, and we also need the covariance matrix. Then we can calculate the performance of the portfolio. So port return, port rate is equal to np dot sum, open bracket, average underscore red into 360, into weight. Average underscore red into weight. Average underscore red into weight. Then portfolio standard deviation is equal to np dot sqrt, open bracket, np dot open bracket, weight dot transform, comma, np dot where underscore math, comma, weight. Okay. Then return for red, comma, for FTP. So calculate the performance of the portfolio, we'll get these parameters. So we have written it into a function. Okay. Portfolio performance is based on weight of each of the asset and the average rate of the asset and the covariance matrix of the asset. Okay, we have created a function called calculate portfolio performance. You can use it directly. So calculate portfolio performance comma weight comma average underscore rate comma covariance underscore matrix. We got the portfolio calculation of the portfolio rate. What we got earlier, whatever we are getting it, we are putting it into a function so that we can use it easily in our future things. So we got the same output. Okay, so we are just trying to check the function, whether the function is written properly or not. So you can give any sort of weights to this function and average returns and covariance matrix. You can calculate the performance of any portfolio. You can calculate the performance of any portfolio using this function. All right, all of you got this? I just did what we did in the top. We are putting it in a function called calculate portfolio performance. We have created a function called calculate portfolio performance, so that in future you can use it for any type of portfolio performance evaluation. All right, so this is one thing. Now we will optimize the portfolio using Sharpe ratio. Using Sharpe ratio. What is Sharpe ratio? Ratio of mean of return. Ratio of mean of return divided by per unit of volatility or divided by standard deviation. So we will use Sharpe ratio as a mechanism for optimizing our portfolio. There are many ratios. Jensen's ratio is there, Jensen's alpha is there. So, but we will use Sharpe ratio to optimize the portfolio performance. What is showing error, sir? Just 1 second. Let me check. Let me complete the data and get back to you. Now, basically, what Sharpe ratio will tell you is how much return you are getting for the risk that is being taken. So this is the importance of Sharpe ratio. How much return you are getting for the risk that you are taking on your portfolio. That is what Sharpe ratio tells you. How much return you are getting for the risk that is being taken on the portfolio. Now, 1 second, Aditya has an error. Let me just go back and check it out. 1 second. Yeah, Aditya, just show me your screen. Actually, I think this is out of index. The indexation is not there. That is the problem. Yeah, it works. Indexation is problem there. You didn't put them in the right place. Okay, now you can check. Okay, now we will look at the Sharpe ratio. So Sharpe ratio should be positive. Sharpe ratio should be positive. If your Sharpe ratio is negative, that means there is a problem in your investment. Okay, so we are just now creating a negative Sharpe ratio parameters. Okay, now I am defining the Sharpe ratio. DEF, neg Sharpe ratio, open bracket, weight, comma, average underscore ret, comma, covariance underscore mac, comma. Now we need to add one more parameter called risk-free rate. Risk-free rate. So what is the risk-free rate? Risk-free rate is your 10-year Government of India bond. What is the risk-free rate of return on that? We will call it as risk-free rate. So P underscore ret, comma, P underscore var is equal to the function we have created, calculate portfolio performance in bracket, weight, comma, average underscore ret, comma, covariance underscore max. See, we are creating a function to use in this function, right? So that is what we are doing here. Then we calculate the return. Return minus open bracket P underscore ret minus risk-free rate divided by P underscore var. So we are we are deducting the return minus risk-free rate divided by variance. That will give us the Sharpe ratio, negative Sharpe ratio. Weight, average, covariance matrix, and the risk-free rate. P underscore ret, comma, P underscore var is equal to, we have created the calculate portfolio performance, weights, comma, average return, comma, covariance max, return minus P of ret by risk-free rate divided by P var. So this will calculate the negative Sharpe ratio. So we are creating a function for negative Sharpe ratio. Okay. Now we will get the portfolio weight. We will find the actual portfolio weight. What should be our actual portfolio weight? Define get portfolio weight portfolio weight in bracket weight, comma, average underscore red, comma, covariance underscore mat, colon, return calc portfolio performance weight, comma, average underscore red, comma, covariance underscore matrix. So we are getting the covariance matrix. Okay. Once we get this, then we will start find max Sharpe ratio portfolio both in bracket average underscore red, comma, covariance underscore mat, comma, risk-free rate. Risk-free rate, colon, number of assets is equal to length of stock or average underscore red. Number of assets is length of average underscore red. Our arguments is equal to average underscore red, comma, covariance underscore mat, comma, risk-free rate, args is equal to constraints. So we are assigning the constraints is equal to open bracket in curly brackets, single quote, type, colon, type, colon, single quote, equity, comma, function, colon, function is also in caps, func, colon, lambda x, colon, np dot sum of x minus 1. np dot sum of x minus 1. Then bounds is equal to tuple of 0, 1 per asset in range of num assets. For assets in range of num assets. So we will ask it to loop around the number of assets, and then optimization is equal to SEO dot minimize. SEO dot minimize next Sharpe ratio, minimize the negative Sharpe ratio, comma, num assets into square bracket 1 dot divided by num assets, comma, come out of the square bracket, args is equal to args, comma, method is equal to SLS QP, comma, bounds is equal to bounds, comma, constraints is equal to constraints. Constraint is equal to constraint. So So we are defining various constraints to this function so that it can calculate the best possible portfolio. Okay. Now, what we have to do is once you have the constraints, return OPTS, ops. Return the ops or optimum rate. So basically, we have created a function called optimization of rate, optimal rate we get. Suppose we want to understand what should be the maximum portfolio weight should be given to our, we have given equal weights, right? So here we are creating a loop wherein it calculates the Sharpe ratio of every asset and identifies the negative Sharpe ratios, then pushes them bottom, brings the positive Sharpe ratios on top, and assigns more weightage to that particular asset. That is what this whole function is doing. Now, to see our actual portfolio, so I can simply say find max Sharpe ratio portfolio will be average underscore red, comma, covariance underscore mat, comma. Now we need to find the risk-free rate. So we need to just find the risk-free rate. I'm just finding the risk-free rate. I'll show you the calculation again. So risk-free rate in India. So the risk-free rate as of October 1 is 6%. Or it has changed or what? It is 5.90 as on October 15th. 5.90. That means risk-free rate is how much? 0.059. 0.059 with risk-free rate of 0.5059 and with the average return what is the weight. So, okay. So what is the, it has given us the investment portfolio. This is the array. Dot. So NP dot round in bracket. Decimal is equal to 4. Hello? Yes? So we are giving distance, but it's giving us 0 point something. So what we got is yes, hello? I think we got very less weight. So based on some calculation, we are reducing the weight. So this is giving us weight, but I'm not seeing any particular E minus 15. All of them are E minus 15. So where is the positive investment we are going to get? Okay, it is asking us to invest 100% in one place. So it is not able to give us the right. So it is giving to invest 100% in one asset. Okay, we made a mistake here. That is the problem. So I forgot the one. Return square bracket 1. So that is why it is giving us the negative rate. So it is giving 100% weightage to 1. So it is asking us to put 100% in only one asset. What is the third asset we have? So it is asking it to us to invest in only one asset, which is the third one, TCS.bo. So little bit complicated calculation. We are just trying to find out the best fall weights for the portfolio. No change, even if it is 0 or 1, it is changing. So this is the building of portfolio. Based on this, we are given 10 assets, so it is giving us what you call invest in all one portfolio. So we have to generally change the assets to get an efficient portfolio. We have to change our assets so that we get the best possible portfolio. So portfolio is a little bit complex thing. We have to find the efficient weight, and then accordingly, we'll give the system the instructions to invest based on the portfolio weight. All right, all of you got this? Any doubts? So anyway, we will not invest in all large caps in one go, but we have taken all the large caps. So a mixture of large, mid, and small caps with various returns should give you a very good thing. When you run this function on different strategies and different stocks, you will get different statistically proven strategy which you can use for your investment decisions. All right, all of you got this? Can we go ahead? Yeah. So portfolio theory is a little bit complicated. So this is how we can build a optimized portfolio, it is suggesting to invest in one stock, which is TCS. So because we have given equal weights and there are 10 stocks, so it is just giving us one simple strategy. But sometimes if you have your own target, then you have to do it in a different manner. Efficient frontier portfolio is a big theory. Again, if you can build a model on that also. I'll just build a model on that so that you can have it in your workbook based on the efficient portfolio theory also. So DF, find efficient return, which is average underscore red, comma, covariance underscore mat, comma, target return. We'll have a target return. Based on that, we'll do this. Okay. Num asset is equal to length of AVG underscore red. Okay. Then we'll also write DF get portfolio weight. Sorry, get portfolio red in bracket weight colon return calculate for performance weight comma average underscore red comma covariance underscore mat square bracket 0. Then constraint is equal to type colon EQ equities comma function colon lambda x colon get portfolio red x minus target return comma Get portfolio volume, comma, num asset into square bracket 1 dot divided by num asset, comma, num asset, comma, SLS SQB, find efficient frontier. Invalid syntax. Okay, so we have done the efficient portfolio. I know this code is very long. I'll explain you in detail. So what it will give us is, it will give us our find target return base. Find efficient portfolio, find efficient return, average underscore red, comma, over underscore max, comma, 0.25. My average return is 0.25. So it gives me the, oh, what happened? It's not giving me any output. So there is some problem with the loop. Portfolio was not defined. I'm not. So efficient return I'm not able to calculate. I'll send you the corrected code later. But okay. So basically efficient frontier returns will be based on your target return. Whatever return you are giving as target, that will be taken into consideration while calculating the portfolio returns. So that is what generally it will do. Efficient portfolio frontier theory. Okay, so based on that calculations, we have to do it. Yeah. Oh, wow. So much of horrible it created. Ultimately, it gave us the result. The efficient frontier based on your target return. So this code I will share you, but basically efficient frontier theory says you need to have a target return. Based on your target return, it will calculate the weightages. So I said my target return is 0.25. So it is giving me the best portfolio based on that target return of 0.25. So portfolio theory, this all things you have to code it into the system. So system based on the weights will execute the trades. So this is little bit complicated, little bit of coding oriented, but basic technical analysis you can do directly without any problem. Okay, so this is your portfolio analysis. I'll share the code with you. Just understand this concept of how the efficient portfolios are created. Might have studied in your portfolio theory efficient frontier hypothesis. So based on your target return, the efficient frontier hypothesis will calculate the target returns. Okay. So let us say we'll go back to our original thing. Should I invest in what is that one? Stock which is doing well. So Bajaj Finance, should I invest in this stock? So yesterday we have done moving averages, right? So based on moving average, should I invest in this stock? Long term and short term moving average. Find out, should we invest in this stock based on long-term and moving strategy. Yesterday we have done the 50-day and 200-day moving average strategy, right? Just implement it and see. So, should we invest in this stock based on yesterday's investment strategy? So just look at your yesterday's score and see based on short-term and long-term moving averages, should you invest on this or not? So we have the TA package, right? TA dot trend dot SMA. So you can directly calculate trend dot SMA. So first let us download the Bajaj pin. So data dot data reader double quotes, give the mean, comma, data underscore source is equal to, yeah. So we have downloaded the data of Bajaj Fin. So Bajaj Fin close is equal to Bajaj Fin dot close. So we have taken the close price. We have taken the close price. Then Bajaj Fin SMA 50 is equal to, I'm using a different indicator today, TA dot trend dot SMA Bajaj Fin close, comma 50. Similarly, Bajaj Fin SMA 100 is equal to TA dot trend dot SMA Bajaj Fin close, comma 200. So we can do 200 day SMA. So PLT dot subplot comma AX dot plot Bajaj Fin close dot index, comma Bajaj Fin close, comma label is equal to close. Then AX dot plot Bajaj Fin SMA 50, SMA 200, sorry. Dot index, comma Bajaj Fin SMA 50, comma label is equal to SMA 50. AX dot plot Bajaj Fin SMA 200 dot index, comma Bajaj Fin SMA 200, comma label is equal to SMA 200. Okay. AX dot set underscore X label is date. AX dot set underscore Y label is price. AX dot legend. Oh, I got an error somewhere. AX is not defined. Okay. Okay. PLT dot plot. Wherever you have AX, we have to use PLT dot plot. PLT. got the last one. Okay, what is the command we used for yesterday for setting the X label? PLD dot X label. Huh? PLD underscore X label, PLD underscore Y label. Sorry, label. Sorry. PLD dot X label, PLD dot Y label, and then we can get the golden cross and see here. Now it is in the position of golden cross. So we can use this TA package as indicators. This TA package has indicators, separate indicators. TA package has very good indicators. Trend.SMA. In trend, you have lot of indicators. So TA.trend. TA package has lot of indicators that we are using. So I have used trend indicator here. So see here, we can see the trend indicator, TA.trend. So after we use rolling window, we don't need to use rolling window if you are using TA. TA has lot of functions, predefined functions. And in technical analysis, we have different types of indicators. In technical analysis, we have different types of indicators. So let us say if you say TA.trend dot and then press tab, you can see here you have SMA and you have the SMA indicator also. So Bajaj win close, comma 100. Let us say we can plot it. Dot plot kind is equal to line. You can plot it. So has no attribute. So we have to use PLT dot plot. So PLT dot plot is your 100-day moving average. Okay, SMA indicator is not working, so we will not take SMA indicator. So if you are looking at the trend indicators, we have SMA, simple moving average, and then we also have what we call within trend indicators. Let me just check Panda's documentation. Within trend indicators, we have lot of them, but the major ones are SMA, simple moving average. Then we have what we call dot trend dot and tag. See here we have a tricks indicator, vortex indicator, SMA, simple moving average, then MACD, MACD difference signal, MS mass index, MACD. So moving average, convergence, divergence, MACD. So that is also there. So MACD, it has lot of indicators. EMA indicator, exponential moving average, DPO, CCI, Aron indicator. See, you have lot of them, ADX indicators. So when you look at different indicators, you have lot of trend indicators. You have EMA, you have CCI, you have Aron, you have AXI. There are a lot of indicators. You can see these indicators will help you too, but we don't use them much in India. Then you have momentum indicators. Even MACD is also very good indicator, but we don't use in India. But we have this momentum indicator. So momentum indicator CA dot momentum dot and tab. CA dot momentum dot see momentum indicator. So we have oscillator, comma indicator, ROC, RSI. Has to be calculated RSI, right? RSI is a momentum indicator. RSI, ROC, TSI, Williams indicator. These all will come under momentum. So momentum indicator will be many. Momentum indicators can be, just the way of calculated, no? RSI, relative strength index, Williams percent R, then ROC. These are all momentum indicators. Okay. Then you have volatility indicators. We have volatility indicators. Volatility indicators are also there. So these are very easy to run in TA. TA dot volatility. TA dot volatility dot and tab. See, average true range. See, average true range, Bollinger Bands, average, see, all these things. ATR and Bollinger Bands are very important. ATR, Bollinger Bands are very important. And Bollinger Bands are based on standard deviation. So, Bollinger Bands, ATR. And then price indicators. We have price indicators also. So these price indicators, CA dot price dot and tab. So if you say CA dot price dot tab. Sometimes the net is very slow, so we are not getting it. Price dot tab. Not price, sorry. CA dot volume indicator. Price is not an indicator, volume. Volume indicator based on volume. So TA dot volume dot and tag. Oh, see here, Chaikin money flow. So there are a lot of things. Chaikin money flow, on balance volume. These are very important. In volume indicators, we have Chaikin money flow, on balance volume indicator, OBV. On balance volume indicator. This is also very used in Europe and US. We don't use them much in India. Okay. So momentum, volume, trend, volatility, and then we have other indicators. So TA dot other dot cumulative return, daily log return. So here, so we can do daily log return directly here. Daily return and daily log return. See, daily log return, cumulative return, all can be done. So we can directly calculate daily log return, and you can also calculate cumulative return. cumulative return. So all these indicators, they are available in the library called TA. Library called TA. This is the library which we have installed today. So these indicators are there within the library called TA. Now, yesterday we have done something called what we call Bajaj spin. We have also calculated, let us say, RSI. Bajaj spin RSI is equal to TA dot momentum dot RSI is Bajaj spin close. That's all. We can now we can also add here PLT dot subplot PLT dot plot Bajaj spin RSI dot index comma Bajaj spin RSI comma label is equal to RSI. So it is giving RSI only, so we have to add actually. So instead of doing this, we have to add it manually. So we have to add it to the matplotlib. I think adding plots is a little bit problem here. RSI indicator. One second. Let me see if we can plot it. So this is actually RSI plot. So EFP dot plot Bajaj spin RSI dot index comma Bajaj spin RSI label is equal to RSI. So if you look at it, it is now close to 50. So it is now going towards overselling thing. So it is now going down towards overselling thing. See here. So RSI is going down to overselling range. See, it is almost between 40 to 50. It is now trading at between 40 to 50. So RSI plot is saying it is trading at 40 to 50. So similarly, if you want to do MACD, Bajaj, Spin, MACD, moving average, convergence and divergence, DA dot, momentum dot, MA, is it momentum indicator, MACD? No, MACD is trend indicator, sorry. DA dot, trend dot, MACD, in bracket, Bajaj Spin, close. Now PLT dot plot, Bajaj Spin, MACD. Moving average, convergence, and it is giving you negative signal. It is going towards the down. So MACD, it is also giving us, if we change it to what you call so it is going also, it is now touching the signal point. So it is saying it is close to zero. So close to signal means it is giving you a buy signal. It is trying to say you might get into the buy area, buy range. It is going slightly up. So PLT dot plot, TA dot trend dot let us use this one, MACD, Bajaj Spin, close. Argument must be float, not yes. Okay. Float argument must be a string or a number, not MACD. Then what output we are getting here? Check one. TA dot trend dot MACD So it is also using close only, close and taking, but I don't understand what is the difference it is giving. Bajaj Spin close. MACD is not. I think you can use only small letter functions. Capital letter functions are deprecated, so don't use them. Use the small letter functions. Okay, so we can do that one. Then we can see here MACD is also a signal type thing, which is giving us whether you should buy or not. So in TA library, you have all the indicators. You have all the indicators within the TA library, and you can directly call them based on the structure, trend, volume, and all those things. You can use them to find the parameters. Technical indicators. So these are the indicators which are pre-coded within the TA. So you have got indicators, right? So all these indicators we can easily do using the TA library. And there is a package called TA strategy also, which is now again given, but it's a very complex package. There is a strategy package also which is available. So you can look at that package also. So TA is a very interesting package where you can do all sorts of calculations preloaded. So you don't need to use any formulas. You can directly calculate and use them with a function name. So you don't need to do any sort of calculation here. So all the indicators are available here. So you can directly use them. Yesterday we were using formulas, right? So we don't need to use any formulas. We can directly use them. So any doubts you have? You can ask me now. Any doubts you have, you can ask me now. Anybody has any doubts or any clarifications you have, you can ask me now. See, basically, Aditya, we work in India. If you look at CNBC and all, most of the times, very limited indicators are used. If you look at Indian market, Aditya, we use 50-day, even use 20-day moving average, 50-day moving average, or 100-day moving average. We are not going beyond that. Okay, very rarely, or very occasionally, we are seeing certain indicators being used by, say, for ICICI Bank. So let us say, I'll show you now, ICICI Securities. Let us say, what is this month? October, right? October 2020 PDF. Market outlook, right? Market outlook, ICICI Direct, see here. So, derivatives, intraday outlook and sell. Now, based on historical performance and all weekly recommendations, they give this, and they go into what we call the forthcoming events. Not this one. So I'll show you market outlook. Momentum page. See here. Now, in this is a indicator. This is all technical outlook. See, if you can see here, let me zoom it. Okay, this is a technical indicator given for Nifty. Okay, so for Nifty, ICICI's Direct is giving you the technical analysis. Okay, so let me just zoom it a little bit. Okay, all of you can see now, right? So this is your ICICI October 16, 2020 report. That means today only the report came out. 11,068 technical outlook, candlestick chart, and look at down. They are using a stochastic oscillator. Stochastic oscillator is again a technical indicator. And if you come to the right, you see here 20-day EMA, 200-day EMA. Instead of using simple moving average, they are using 20-day EMA is 11,602, which is your resistance level. The second resistance is 200-day EMA, which is 10,938. Action is buy. So this is purely based on technical indicators. This is purely based on technical indicators. So we believe strong support. See, it is saying 11,500 is the strong support. Now, here, see here again they are using ICICI buying guy is using stochastic with EMA and 20-day EMA and 200-day EMA. Duration intraday. See, stochastic again he is using stochastic indicator. Based on that, he is giving you the bearish engulfing, and then it is giving you the buy and sell. See RSI. See RSI. In this case, he is using RSI. See, 14-period RSI generated basic causal suggestive negative bias. So it is going towards 50, less than 50. It is going towards less than 50. So RSI indicator, stochastic indicator are used in research reports. Similarly, you can see here, again he has used RSI. See, RSI is suggesting, so the daily 14 periods sustaining above its 9 periods average, thus validates positive bias in this stock. See, he is saying it is going towards 60. This is the overbuying, this is overselling, the dotted lines. So here he is using RSI. He is based on RSI. So we don't use all the indicators. We use only simple moving average, exponential moving average, to some extent we use RSI. And some of them use oscillators. Stochastic oscillator is being used. So basically on that 3-4 indicators, if you remember, that should be enough. That should be enough. And then Fibonacci pivot point, support 1, support 2, support 3. So pivot manually you have to calculate. So
the technical analysis was extremely straightforward, sir. I mean, we could understand. I mean, so my question, no, the technical analysis was clear. I mean, it is pretty straightforward, sir. I could understand what you were trying to explain. My only issue was the kind of inputs that went into creating the say an efficient frontier or an efficient frontier curve.
Okay.
So the kind of Python inputs that go into it. So is there a way to, because these are all big, huge inputs, which.
What only thing is, sir, you have to save this code. That's all. Once you code it, you can use again and again.
Okay, sir. Okay.
You can just, I will send you the notebook, right? You can use it again and again. The code will not change. The formula doesn't change, right? The efficient frontier hypothesis formula was created in 1960s. Till now, there is no change in the formula. So once you code the formula, that's fixed. Once you have used the set of code, your only parameter you need to change here is what is your target return and what is your weights. The only thing you need to change here is weights and average return.
Okay.
You can take any 3 assets and then calculate average return, give your own weights, then calculate the covariance matrix and give them as inputs. It will automatically, the code will not change. The code will be stagnant only.
Okay, sir, fine.
So all you have to do is, I have created a 10 portfolio, right? Instead of 10 portfolio, average return of 3 stocks, and then create the covariance of the same 3 stocks. And then target return, what is the target return? Then it will give you a best sort of portfolio. So once you create this function, you can use it again and again.
Okay.
You can use it again and again. So you don't need to remember the code. Code is there. You will find this code in textbooks. You can find it on GitHub. You will get it everywhere.
Okay, so that is what I meant. That is what I asked when I said for this, there's a link or something.
Yeah. See, this is the only function you need to remember. How to use this function is only you have to remember.
Okay.
That is the only thing. Very simple thing. So we need to give the what you call average return and weight, right? So weights also we have given here on top. See here?
Yeah, we had given 10% weightage everywhere.
So 10 weights we have to give, right?
Yeah.
So once you give your average return and weight, once you say calculate the performance of the portfolio, it automatically calculates everything based on your weights and it promises. So you don't need to remember any of this code. Even I didn't do anything on my own. I have a pre-done thing where I'm looking at my iPad and typing because nobody can remember this.
Exactly. That's why I asked.
Nobody can remember this. So all we do is to find all these codes available in the documentation site.
Okay, sir. Okay.
The library documentation is in a TA. There only you'll get the code.
Okay, sir. Okay.
All you have to do is copy and paste it into your notebook and then change your parameters. And then
Okay.
accordingly you can play with it. So there is no requirement of remembering the code. You need to just give the input rightly. So these are all predefined functions. Once you have defined a function, it is there forever. So efficient return is, you can use it again and again with your set of average returns, with your covariance matrix and your target return. So that's all.
Okay.
No
Okay, sir.
complications there. So that is what will happen. So these also very simple. Only you fix the format and then you change the name of the stock, and then you can get your own analysis out of this.
Okay, sir.
So it's very simple. You don't need to remember anything. Once you have this in your hand, now you can play with it. Once you have the base codes, you can alter them. That's all. The only thing
Yeah,
is
sir. Got
adjustment
it.
and altering.
Okay.
So that's why you don't need to do anything. Everything will be there in GitHub, sir. Because
Okay,
what
sir.
happens is every quarter, even I generally code any new function, I'll put it into GitHub. As a community, we do it.
Okay.
So
Okay.
people
Okay.
can use it without any coding requirement. See, RSA formula is very complicated, but everything is pre-coded into a simple function called RSA.
Yeah.
Right? You know RSA formula, right? You have to calculate exponential moving average, 14-day, 26-day, and
Yeah.
then it's
Yeah.
a complicated formula. But by using everything is coded into one single function called RSI. So you don't need to calculate anything. It is there. So you have to just use the formula and then calculate. This is the RSA formula, which we generally use to calculate relative strength index. See, RS is 100 minus 100 by 1 plus n up by n down. Average updates, average this, and then we calculate it. So these complex formulas are coded into a library called TA. That's what I'm telling you. The library called TA has all the indicators coded. You can use them. You can find what is the existing RSI. See, the existing RSI is going towards 50. So everything is very easy. And I'll send you the link, GitHub link of the examples also, how to plot and all. That is
Yes, sir,
also
that'll
very
be helpful.
very easy to plot.
Okay, sir.
So I'll
Okay.
just put it in the window.
Sure,
so that
sure,
you can
sir.
also see it. See, now there is no requirement of coding, sir. That is very clear because when I started with Python 5 years back, for everything we used to write code. Now we don't need to do anything. It is pre-written. Everything is pre-written. See?
Okay, okay, sir.
GitHub. You'll see in GitHub. In this GitHub, examples to use. See here, visualize features of IPNP5. So this place, you will see all the how to plot, how to do everything is given here. See, plotting different features. The writer of the program only will give you. See, Bollinger Bands, PLT plot. This is your Bollinger Band surrounding the price. Cater channel, Johnson channel, MACD. See, now I plotted MACD, right? Actually, MACD will look like this. Signal and difference and MACD. And then you can see KST, Ichimoku, Kinko, Hayo, and then see here he is giving you all these different types of plots and all you can see here. And based on that, you can choose your, you can send a line to them saying that I want to understand the plotting even further. They will send you more, see volume features dot example. What are all volume features they have. So everything is there in GitHub. So I'll give you the link of this GitHub also where you can use this also. I'll just copy paste it and to the chat window. You can take the link from the chat window.
Okay, sir. Thank you.
So everything is here, sir. But if you want even more easiest way, R is the best. If you want even more the easiest way of running these things, R is best, sir. So what happens in R is everything is even preloaded in R. Even everything is preloaded in R. So that is even more convenient for you. But Python is where you work with large scale data sets. So let us say I have this R quantitative finance using R videos are there. I'll just share you the link. Where is it? Quantitative econometrics, quantitative finance using R. Okay. So in R, we have a package called Quant Mode. In R, it is very easy. Everything is easy in R. So you can zoom charts like this. You can see the lines, the average lines. You can see the indicators. Everything is very easy. See the Bollinger Bands that we have plotted. Add RSI. So in case of R, it is even more easier. I'll send you this link. You have any idea about R, sir?
No, sir. I'm not used to any programming. I mean,
R
coding
is also
software.
very simple. R is
Okay.
also just a function. See, add Bollinger Bands, add RSI, add chart. It will add to the, and then you can see the chart very easily. See, compared to Python, if you want to use R, it's very easy. R Studio and R. Rajesh sir, I'm giving him R. He's also learning R from me.
Okay,
That's how
sir.
I interacted. So R is even more easy for technical analysis. See, in R, you can see here, you can plot the RSI, you can do anything. See, multiple plots can be done in one window. See, these are your bands, this is your RSI, then this is money flow. See, all these plots can be done in one.
Yeah.
So if you have time, you can experiment. I'll send you the YouTube channel, my YouTube channel link. You can find the quantitative R. Or when I will definitely do quantitative R sometime next month. I'll send you an invite. You can come and join that also.
Okay, sir. Definitely. Thank you so much.
We can also look into that part. So generally we do quantitative R. Last month only I have done.
Okay.
Most probably is to November I'll do it again. Because based on the participants and all the requirements, I'll be doing them. So that's how we'll do it. So you can see my YouTube channel. There you have all the things, quantitative R, everything. I'll share the videos and all also. You can freely accessible and you can do it.
Sure, sir.
So
okay.
R is even more easy. If compared to Python, R is more easy. And see, the market outlooks, everybody gives like this technical analysis only, right? You must be very familiar. HDFC Securities also.
Yeah.
Same thing. Short term is all about technical analysis.
I think the R screen looks very similar to my Zerodha Kite screen. RSI, everything looks very similar. The technical charts.
R is zero cost, open source,
Yeah.
everything free. That is one more important thing in R is it's even easy to use. See here. RSI is even HDFC Securities, JSW Steel. See, RSI and stochastic. So we don't use all the indicators, sir. In India, we don't use all of them.
Yeah.
RSI, SMA, DMA, SMA, and EMA. These are the things which you need to use. Okay. And when you are doing portfolio analysis, sir, the efficient frontier is one of the old, but you have to study research papers. Latest portfolio theory has been added.
Okay, sir. Okay.
The ones that are used by American portfolios, the firms, portfolio management firms.
Yeah.
They do a lot of research. I think 3 months back there is a research paper in Journal of Finance where they have come with a new theory which will identify, which will increase the portfolio return even in the downturn market also. So some PhD scholars have developed a new portfolio model where in highly volatile and downtrending market also they are able to identify positive return stocks.
Okay.
So a lot of research is being done. So that is how we keep our. Here they use MACD and ADX. The combination of bullish MACD and bullish ADX. So they use, some of our guys are moving beyond the basics ones, but most commonly are RSI, EMA, SMA, short term and long term. In this case, I don't know, this analyst is using MACD, convergence and divergence, and ADX. So all these things are pre-coded. So you can see everything here. So only some of them are important, which we can use in our daily chart analysis.
Okay, sir. Okay.